everybody. In this video I want to talk about Clorox, kind of go through the fundamentals of the company. Kind of want to take a look at their investment presentation, stuff like that. Their earnings are August 2nd, or August in between there, so today's actually July 1st, but I'll probably upload this video tomorrow because it's not really important time-wise, but I kind of want to get a better grasp of the company in case if we get a buying opportunity this month of July. I'm looking technically price target, around like 160, but I don't know if it'll get there, but I kind of want to learn more about the company, do my due diligence a little bit. So I thought for fun we can take a look at the company basically. I do want to take a look at some just quick key metrics annually. Let's do like more of a macro view. Average PE last 2012. It's looking about early 20s, low 20s, and PE is 25. Trailing 12 months. A little high relatively, not too high though. Not really worth noting. Current ratio got a lot better. They did raise a lot of money. Actually, this is from 20. This is almost a year old. Why? I'm confused. Why do they not have June? Oh, I guess, yeah. Okay, they're not gonna update it for another like few months, or a month maybe, so let's just do quarterly. Well, we got like 3 years of data anyway here, so that should be fine. PE should be about the same. Current ratio. Yeah, since the pandemic, they've made a lot of money, so they obviously have more assets, probably in cash. Wait a minute, why is the debt to equity so high? Like, that's like pretty high. You want this to be really low? Let me go to the balance sheet. They have like no shareholder equity. Where's their, that's obviously, but total liabilities 5.5 billion probably. Total assets 6. Why is their equity so? Actually, according to the chart, the equity's increasing. But actually, I'm sorry, the debt. They got a lot of debt. Jeez. That's a lot of debt. That's a very high debt to equity. Where were we? Debt to equity. Let's read this again just to make sure. Ratio we calculate and divide the company's total interest-bearing liabilities by its shareholder equity. Ratio determine ledger to equity, financial leverage. Debt to equity ratio can be compared to a company's historical average. Above 1 indicates the company's more debt, and a ratio above 3 is considered high. Yeah, they have a lot of debt. 4. Why would they, especially last quarter of March, why would they take on more debt, or their equity went down? Either way, that's a pretty big number. We have like 5 over here. 2019 December. Free cash flow yield. I don't really look at this too much, but net profit margin. On average, maybe like, let's say 12-13% profit margin. Not bad. I kind of want to check the dividend. Let's do annual dividend. I got like 11.444. Is this yearly? Yeah. Let's say like 7%, 6% maybe being. That's not that bad. That's pretty spicy. Debt growth. Okay, I think we can come back to this. Let's go to let's see, diverse, US-centric portfolio. 30% cleaning, 4% vitamins, so 41% health and wellness, 27% household, 17% lifestyle, 15% international. So they got room to actually, yeah, I mean, get into other markets, but I guess the main market is US, obviously. 8,000 employees, 100 plus markets, water filtration, grilling. But yeah, this is why I want to look at them, because I feel like they have a lot more brands than I thought. Yeah, Brita, obviously Clorox, but they own Hidden Valley Ranch, interesting. Glad, the bags, some pet supplies. I don't know these too much. Burt's Bees, like the lipstick or chapstick. Let's see, grilling. Clorox number 1, what does that even mean? Mid-sized categories. Categories are more rational, less crowded with multinationals. Grow categories with deep consumer insights and world-class capabilities. So they got wipes, water filtration, bleach, salad dressing, cologne, lip balm. I'm actually curious what water filtration systems they have. Is it like, I guess Brita, I thought it'd be like some type of medicine, like Imodium or not Imodium, iodine. Let's see, yeah, nothing really here. From over the 5-year CAGR, sorry. Sales 3.5, EPS up 10%. EP, what is EP? Economic profit, okay. Shareholder returns. Strong, I mean, they are highlighting this because they could have COVID, like they did very well. A majority of this is because of COVID too. I'm gonna take a look at their chart really quick, actually. Like, yeah, 5-year chart, like, yeah, they're up a lot, but it is because of COVID. They also did drop. They're down 25% from their high back in August of last year. So strong value for society, 3% sales for innovation, 87% employee engagement. What does that even mean? Products with sustainable improvements, 92% from recyclable packaging. That's interesting. I wonder what percentage, though, of the plastic is recyclable, or is it 100% of the plastic? You know, sometimes companies will throw in like, oh, made with 10% recycled plastic, you know. Reduction by 2020 on track. 30 million products donation, 3 million employee volunteer hours. Okay. So they got some awards. Cool. The best employer diversity. Okay. Purpose we claim, champion people to be well and thrive every single day. Okay, I don't really care too much. Performance outlook, sales versus a year ago. It's about flat. 21, 10 to 13% sales outlook. So they're expecting, I think it's adjusted EPS versus a year ago. I mean, I guess it increased. Are they expecting to increase at about 4%? Last year it was down. Or last quarter, this quarter. Yeah, duh. I'm reading, I can't read a simple column. Q3 last year, 1.63. Last quarter, infinite guide strategy. Okay, let's see. Now more opportunity to grow. What does this even mean? I don't really care about this slide. Delivered strong free cash flow. I mean, yeah, they did, because they made a lot of money, but even before that, like 10 to 13% free cash flow. I guess whatever there. I'm actually kind of curious. Let's go to the metrics. Free cash flow per share. They should have percentage. I guess, yeah, this would be the growth. I was curious if like it's similar numbers. It should be, but 4% versus YA. What is YA? I don't know. Let's see. This is what I like. I like to figure out or see what they're using their cash for. So how are they using their cash? Business growth, strong reinvestments in 21. CapEx, people, technology, A&P. What's A&P? It's probably something very basic that I just can't think of. Cash return to shareholders, nearly $4 billion in the last 5 years. So it's about like 8.59 million or 100 million each year. Almost $1 billion. So repurchase. These are probably in millions. Yep. 2019 they did a lot. They bought back a lot of stock. Wow, 2019. During that year, it was trading to a range of 140 to 160 about. Support dividend, average annual dividend increase per year average about 4%. So they've been doing, I guess, about 6. That's 9. Debt leverage target 2 to 3. Debt leverage, what is that? Star for? Debt leverage. No, it's a non-GAAP measure. Yeah, that's basically what they meant. You know, they got a lot of debt though. Hopefully they can chill with that. Done a lot better over a 20-year period than the S&P. It's good, impressive. Long-term investment case remains solid. Investing behind leading brands to grow categories and share. Increasing expected values, innovation. Health. Like, I do like this sectors they're in a lot. That's why I like this company. As well as the dividend. I kind of wish. I feel like just having a consumer staple, or I guess this would be a consumer staple, non-discretionary. Yeah, you kind of need these products. So strong cash flow generation, strong financial capacity to invest for the long term, top tier, average annual dividend increase rate over the last 3 years. $2 billion open market stock purchase program initiated in May. I want to go back to that. So each year, let's see, you got like 2, 3, 7, maybe like 3 to 400 million in stock repurchasing. Actually, let's just quarterly metrics. Stock repurchase. Stock. No, that's not it. Stock repurchase. I could have sworn I saw it over here a second ago. Payout ratio. They must have did something. They took on some debt or something this quarter. Or the quarter in May. It's about 50%, maybe 60, a little bit high, but not too high, with a lot of debt though. What was I looking at? Stock repurchase, yeah, being cash flow, I guess. Dividends paid, equity repurchase. I mean, that is what I could have sworn it's something different though, but it would be in the investing area. Anyway, let's go back to here. They are buying back a good amount of shares. I do like to see that. Is it as important as paying dividends? I don't know. That's a good debate to have, but I think it's important to have both. Innovating where you have advantage. Yep. From carton to wrap. Oh, okay. That is actually interesting. It's such a simple thing. Yeah, going from like a cardboard carton where you're putting a flexible bag to just wrapping it using a lot less material. Yeah, this is plastic, but the energy and amount of like material that is for this amount of plastic is so much less energy and environmental impact than this. You can debate me on that, but that's just like from an energy point of view, this is so much more beneficial. It'd be good if this this was also recycled and everything, but anyway, that's interesting to take note. Let's see, driven bigger, stickier platforms. Driving bigger, stickier, what is it? Bigger ideas, sweater. They're just making bigger stuff, I guess. Is that what they mean? Investing in digital capability, data analytics. I'm kind of just saying words on the thing. I just realized that. Accelerate core with mega trends. A lot of words, just trying to make it look nice, I guess. 2030 environmental goals, 50% reduction in virgin packaging, 100% recyclable, resumable, or compostable packaging by 20. So this is 4 years, about 3.5. So they must be getting kind of close to this goal, but yeah, I did mention that before. I was wondering what they were doing with that, or how much of the percentage of recyclable stuff. So 100% recyclable, reusable, or compostable. Cool. 100% renewable electricity. Oh, they got that. Wow. 100% renewable electricity in US and Canada. Huh. They achieved that already. Accelerating growth, doubling down on our strengths, building a global cleaning and disinfecting brand. I don't think, actually we'll discuss that, but I don't think Clorox is going anywhere. At least their products, you know, you just gotta clean stuff and... Okay. Touchless disinfecting innovation. Oh, they're making like... Oh, okay, this is actually kinda interesting. They got a Turbo Pro electrostatic sprayer, handheld sprayer, target medium to large public facilities. Okay. Let's see, what is a powered sprayer? This kind of looks like a paint gun thing, like a, you know what I mean, to paint a house, spray paint. I guess more like a car. Targets smaller business and spaces, so they got a mega one for businesses, and they got smaller. So they got different spraying. I don't know what this, how important these sprayers would be, though. You know. I think. I don't know about my speculation, but I can't see it being that amazing. But I do like the ingenuity. Progress on collaborative relationships. Doesn't really show the progress, kind of just says it. Key metrics. S&P credit rating. You know, actually, wow, their credit rating, I guess triple B. That's basically an A. A minus. Wait, they're debt to OE, but which I guess is technically a better thing than is it? I don't know. As opposed to debt to equity. Debt to equity was rough, but it's about the same. Debt to you know, and kind of surprised with all that debt. Let's go. I kind of want to take a look at this again. You know what? We can actually check here. Sorry, I'm clicking around a lot, but I like to just get different numbers if possible. Let's just look. Want to do quarterly? Let's do quarterly balance sheet. 5 billion. Net debt, total debt's 3 billion. Assets 6. So let's say they got 3 billion debt right now. Each quarter they make, actually let's do operating income. Wait, operating income out of 1.7, they're only making 3. Their margins are kind of small, right? Hold on, let's do 305 divided by 1781. 17%. No, I guess operating income's not bad. I don't know why, I just thought it'd be a little bit higher. Like more like 25% or something. Maybe I'm getting ahead of myself. should have operating. Nope, that's not it. I want operating income divided by the. What am I even looking for anymore? It should be income. They don't make that much. It should be the bottom. 13%, 17. Yeah, I feel like it'd be like high 20s, not 17. Anyway, net profit margin. Alright, let's go back to this. Debt to EBITDA, debt leverage reconciliation. So here they're actually bringing it up. In basically 5 years, it hasn't really changed though, so. I mean, we could probably break down these numbers, but I just don't like the debt. Like, why is there so much debt? Maybe to build the factories and stuff, or to, produce all the stuff, but like they're returning a lot to shareholders, but maybe they just don't really care about the debt. I feel like maybe it's just me, but maybe it's the market we're in. But I just don't like that, like, companies with a lot of debt, but so many companies, like good companies, have a lot of debt. 3M's got a lot. McDonald's got a lot. Maybe they're using it to aggressively expand the company, but I don't know. It just seems excessive. Reportable segments. So in the 1 year, 3 months change from last year, health and wellness is down, household is up, international so. Net sale drivers. Okay, let's keep going. Return on it. Here's the return to shareholders. It's in millions each year. I'd say about 700 million at least. Dividends paid. I mean, that's obviously going to increase. Earnings before adjusted tax. Yeah, that's it. Okay. Supplement financial schedules. What is this? I don't know. I don't think we need to see that. Press release. Yeah, I don't feel like going. We kind of just went through this in a little bit more colorful fashion. Let's go back to this. I want to see the cash flow. Quick expand it all. We're in annuals to quarterly. Why not? What happened this quarter? What did they spend so much money on? Financing cash flow. Stock insurance. No, that's about the same. I feel like we're looking for a really random number. Because didn't actually, where's that number we're looking for? Yeah, why'd they not like make any money last quarter in March? They had like no operate out of $1.7 billion made. They didn't actually make any money. It costed them that much. Gross profit. Where's my math going wrong? So it's about the same here. Why is there a profit here, not here, if these numbers are roughly the same? Sorry, but we're just looking at income statement, not the cash flow. Let's move this over. Revenue is the same, gross profit, operating expense. Sorry, operating income is what we're looking for. 305. See, this is showing a different number than this. Maybe this is just wrong. That's why I like to double check things. One of these are wrong. I guess we can go to here to figure it out, but this site's good, but I think I trust Yahoo a little bit more. Where were we? Operating income. Wait, did they lose money this last? No, EPS, where'd it go? Basic EPS. Okay. So I'm thinking we should just talk about let's see, the analyst ratings. I mean, just a hold. Yeah, I still don't think it's really a buy. I mean, I want it, but what's the starting yield? 2.5. What would it need to be? Let's say it went back to, let's see, they're doing actually $1.16 per dividend, or per quarter. Let's say it drops to 150. That would be, so like 155 is like a 3% yield. Let me go to a chart. I guess that is a chart, but can't zoom in or anything. 3 year, let's go to 5 year. I still think, this will be a strong support, like 160. If it gets there, I'd be hopping in. But look, it's already down like 25%. I think it definitely had that big, like, just peak, but 160. If you get it at 160, I mean, again, I'm being picky with prices. Like, does it really matter? Probably not, but 160 be a 2.9. I'd be happy. Starting yield 2.9 on Clorox. Not really happy at 180 where it is right now. Curious what the ROE is. ROE, where did it go? It should be here, but I don't see it. Yeah, I don't see it. Wait, they're 22 billion. That actually isn't as big as I thought it would be. I thought it'd be like at least 100 billion. How big is Kimberly-Clark? 45 billion. Wait, their dividend right now is pretty high, 3.4. Huh. That's actually pretty spicy. I mean, I know we're talking about Clorox, but it's in a similar market. Wait, Colgate 70 billion. That's larger than Kimberly and Clorox. General Mills 30. Let's check this out real quick. Kimberly-Clark, I think, has debt to equity. Like, is that? Yeah, that's why I think this ratio is weird too, because we're looking at the equity, like specifically the equity, and for a decent amount of these companies, especially the consumer, like non-discretionary, they have no shareholders' equity for whatever reason. No book value. Some people don't really care about this. I like to think it's like important because of, if you take all the assets, all the liabilities, you wanna, like, if I own a house and I have 90% of my house is in debt, like I'm on a loan or something, or I don't really own it, right? The bank owns 90% of it, I own 10%. That's kind of like how I think about this. Like, they don't really own the company. It's just all debt, but like, does it really matter? I don't know. That's like a debate, but they seem to be doing fine. Obviously, expanding the dividend a lot. Like the current ratio is not good. There's no equity in the company. Payout ratio is fine. Dividend yield is fine, or like really enticing right now. Margins are actually, it's like 13% on average. Not amazing, but it's not like terrible. Growth, where's dividend growth? Dividend growth annually. About 4% per year, but I think they recently increased it even more. Dividend per Yeah, we're not gonna get that number. I'm gonna go to KMB. Actually, we can just do it right here. Like they're looking pretty spicy, to be honest. What was I gonna look at? I was going to look at something. Oh, the new dividend. Yeah, I gotta look on this chart. 114. So they increased it 7 cents since last year. They actually fell a pretty good amount. Right now they're trading 130. 16% from the highs. I kind of like it. I'll think about it though. I like Clorox as a company more. But like at a 3.4 is actually not bad. PE 20, let's check out PEs over the last whatever. Quarterly PE, yeah, 20 is about on the lower end, 18, 19, 28. No, I guess 20 is a little higher. Yeah. Anyway, I'm gonna wrap this video up. Let me know what you guys thought. Clorox, okay, or Kimberly Clark. I think I like Clorox a lot, but if it hits 160, I'll be hopping in. But until then, I think I'm gonna chill. Maybe I'll buy a share here and there, but nothing too intense. But yeah, let me know if you guys, what are your thoughts. Anyway, hopefully you enjoyed the video, and I'll talk to you in another video. Take care.